Hey everybody, this is Sean Leland with Nexa Mortgage, and today I wanted to talk about the key differences between conventional, a high balance loan, and jumbo loans. So if you look at conventional loans, you are looking at the typical guidelines that we all know and love, where your minimum credit score is going to be 620, your minimum down payment is going to be 3%, and your maximum loan amount is going to be $766,000. Can you imagine making that payment? Holy smokes. So that essentially are the minimum requirements for a conventional loan. If we then look at a high balance loan is basically created for conventional buyers in markets where the cost of living is through the freaking roof. I think Washington is a prime example where you see that, where Spokane is still relatively inexpensive to live. I think it's probably a fantastic place to live, quite honestly. But if you look at the left side of the state, over there, you really can't get into a home, for less than $1 million, it seems like. So they created a conventional loan option for people in markets like that. The key differences are going to be first in credit score, where your minimum credit score is going to be 680, a 680 FICO. Still very achievable. Your minimum down payment is probably going to be closer to 10%. And again, like conventional, if you put less than 20% down, you're going to be paying mortgage insurance. So can you imagine having a $926,000 loan? You're paying mortgage insurance because you only have to put 10% down, and you're probably going to have a little bit higher interest rate. Yeah, that is a tough one to swallow. But we do make those options available for people looking to obviously purchase in any market. So finally, we are going to look at jumbo loans. So obviously in the title, it means it's going to be a pretty damn big loan amount. Maximum loan amount is going to be lender specific, but I'm sure that I've got lenders that will go as high as $3 million. Can you imagine that payment? Typically with jumbo loans, you're going to have a minimum FICO score of about 700, and you're also going to have a minimum down payment of anywhere between 10 and 20%. And now, because this is a non-conforming loan, the guidelines are basically established by the individual lenders providing the loan. Some people might call this, like a portfolio loan or something like that. But they determine their own guidelines. So given that, if you're in a situation where one lender is requiring 20% down, don't take that as gospel. There might be other lenders out there who are willing to allow you to put a minimum of 10% down. In that situation, more than likely there might be some sort of mortgage insurance because, of course, the insurance is there to protect the lender as well as default against you. Anyways, if you have any questions or want additional information on conventional, high balance, or jumbo loans, feel free to reach out. This is Sean Leland. I would love to help. God bless you and love you. Take care.